Good morning, everybody. Hey, welcome to this Wednesday, halfway through the week. It is May 14th. Hard to believe, isn't it? Glad you're with us today as we'll talk about what happened yesterday in the markets. Stick around. Dave will be with us in just a few seconds. Before we do that, though, let's not forget there are so many things that are out of our control. You can take control of your investment portfolio by knowing the amount of risk you have and making sure that it lines up with the amount of risk you should have. Give us a call at 863-382-0037 to schedule your core retirement analysis. With that, we got Dave coming up next.
8:42 here. That's 18 before 9 here at your Light FM.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
It is time to find out what your situation is like on Wall Street this morning with the help of my friend Phillip Statler from Statler Financial Services. Good morning, Phillip. How you doing today?
Good morning, Dave. Hey, doing well today. It is halfway through the week, and it's not been bad. I mean, the Dow got beat up yesterday because of United Healthcare, but other than that, we've seemed to find green ink this week.
It sure does look like it. Yeah, yesterday was one of those practicums as to why you and I always say, don't watch the Dow as an indication of what the market was like. The Dow ended up down 270 points yesterday, but the S&P was up by 0.72% at 4236 up. NASDAQ was up 1.6%, up $302 yesterday, and the way the math works on the Dow Jones Industrial Average, United Healthcare has a crappy day, and boy, it brings that index down, doesn't it?
It really does. And we can kind of look at the flip side when we look at the NASDAQ, Dave. I mean, NVIDIA had a good day yesterday. Supermicro Computers had a good day yesterday. You know, a lot of the tech stocks, and that's what's showing there on the NASDAQ number. The Russell 2000 was up almost 0.5% yesterday.
Not bad at all. Yeah, we need to make note of the fact that the NASDAQ index is also price weighted, so when Supermicro has a good day, it'll drag it up against other ones as well. But boy, oh boy, 269 down on the Dow. I got a friend that watches the Dow as his primary measure of the market, and he was in the dumps yesterday. I said, no, 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 no. It's just one stock. It's hard to do. Hey, good news in the process too. Yesterday, the S&P 500 crossed its 200-day moving average to the positive side, and that generally has a tendency to trigger some computer trade orders in the process because the chart geeks have a tendency to look at that as being a sign it's time to jump back in again. I'm going to assume we're probably going to see some upward movement based on that as much as anything.
But we could also remember we have now gotten back to above where we started this year in January 1st.
Absolutely. I was thinking when I saw that headline last night that we're up to positive for the year. You know, you can argue about tariffs. You can oppose Trump. There's a whole bunch of reasons to oppose President Trump, and you can have a good reason to oppose tariffs as a strategy. But I got to give him some credit on this. Over the last few weeks, what's happened? We boosted tariffs through the roof, or at least threatened to, and then put them on hold. Negotiated a deal with Great Britain to keep the 10% base tariff numbers on, but everybody went, oh, yippee, the problem's over, the tariffs are gone, and we started trading things up like crazy, saying, oh, we're negotiating all the tariffs away, and nobody's even mentioning the fact that we're keeping a 10% base tariff on just about everything that isn't nailed down. One thing you got to give the guy, he is very good at manipulating us and doing the PR number on his economic policy, right?
He is, and like I said earlier this week, April was a great month for tariff income, and it helped reduce our deficit. So, look, folks, anything that helps reduce our deficit, though painful, I will agree, still is somewhat good because our deficit has gotten out of control.
It's at the point right now where, I mean, even my friends to the left of center are saying, yeah, I get it, we got to do something. And when I do the math, the tax the rich routine always sounds good, but I did the math, and if we put a $1 million surtax on everybody with a with an AGT of over $1 million, I mean every single one of them, we wouldn't even be able to pay off the annual deficit, let alone make a dent in our overall national debt. And let's face it, there's always that bell curve in the process. You take people with a gross taxable income of over $1 million. Most of them are on the low end of that. In other words, take absolutely everything the $1 million income people have, and we still wouldn't finance it. There's got to be some compression or an alternative form of revenue, one way or the other, and taxing the rich isn't necessarily going to do it.
No, it's not. And, as much as people want to think it will, it won't. You got to drop that number down, really and truly, to people that make more than probably $150,000 in order to satisfy our budgetary needs and help start to offset some of the deficit.
Absolutely. And we start talking $150,000. 10 years ago, that sounded like a pretty doggone good income, but some figures you found overnight last night, that's barely enough to buy a home anymore, isn't it?
Yeah, it is. I mean, one of the things I was looking at was an article talking about, how much income you needed to buy a home. And in Florida, we're not the highest, but we're sure not the lowest either. The Midwest seems to be kind of the place to go buy a home. Kansas, Missouri, Illinois, Ohio, Oklahoma, some of those places. Here in Florida, you need $125,000 today in income in order to buy a home. That's significant number.
And that's a scary thought because let's face it, housing prices may be cyclical and they may drop a little bit in Florida, but they ain't going back to the point where a family earning $50,000 a year is going to buy a home anytime soon.
No. I mean, even somebody that makes 100, they're saying it's going to be tough.
Absolutely. So yeah, it's a whole brave new world in the process. And frankly, I make fun of Gen X and their feelings about getting $100,000 a year job straight out of college. But fact of the matter is, $100,000 ain't all that much these days when you're starting a family and trying to get started, is it?
It's really not, Dave. It's not at all.
So I'm empathetic even while I'm making fun of you young'uns. Good news so far this week. We got a good consumer price index number yesterday. Mortgage indexes came out this morning, and the purchase index was up by about 3%. That after a nice boost yesterday, and or last week, and there's no big surprise to be had with mortgage rates as they are. The refi index fell like a rock again. We're kind of doing tidbits as much as anything today because we're kind of soft in terms of reports coming out of folks that mention that report on the exchange. Got to make mention of Coinbase. You mentioned it yesterday with them joining the Standard & Poor's 500. Stock went up by 24% yesterday. That's encouraging if you're into Bitcoin, isn't it?
It is. I did see, though, somebody was talking about quantum computers impacting Bitcoin ETFs, not in a positive way. Not sure what that was all about, but it did catch my eyes. I was kind of gleaning through stuff today.
There's kind of flies in every financial bowl of soup somewhere, and you might have found one. Other stuff going on across the pond. We don't trade them on our exchange, but stockholders for Honda are a little bit nervous because Honda reported over in Japan. And just like U.S. stocks, guidance was conservative because they're concerned about the tariff situation, so their stock is dropping like a relative rock. They were showing a $3 billion tariff hit projected over the next few months, which isn't good news for Honda stockholders over there. Price of eggs is down. Have you bought eggs?
Yeah, no, I haven't. I'm sure my wife has, but I haven't.
Went way down in April, as in food inflation declined for the most in 5 years.
That's nice to hear. I mean, I still hear people complaining about the prices at the grocery store, but...
Well, can't please everybody, but the price of eggs is down. What other tidbits have you found this morning?
Hey, let's talk about some individual stocks here. We got Super Macro Computers really is man going gangbusters, man. It was up roughly 15% or 16% on Tuesday. It's up another, I think almost 17.5% now this morning. I mean, that's over 30% in 2 days that we're seeing super microcomputer getting a bump. One of the things I think is contributing to that is Raymond James initiated coverage this week, citing that the company really outperformed their fiscal third quarter results last week. The other thing I think is probably helping them is, at least it may be, the deal that they've backed off of tariffs with China, for this 90-day period. So that may be helping them, as well as the deal with Saudi Arabia, maybe another thing that's helping them out.
Doesn't hurt. That the tech stocks generally are roaring back. Nvidia recrossed the $3 trillion market cap number yesterday. So tech is almost kind of going back to being the place to be short term, isn't it?
Yeah, it is. Now, on the downside, though, we got American Eagle Outfitters. They withdrew their 2025 guidance, quote, due to macro uncertainty. And so they're faced with slowing sales. They're having to do deep discounts. They actually took a $75 million write-off related to their spring and summer merchandise. They're trading down 13.6% this morning.
Ouch. I always use products in that category as being a kind of a lead item as far as consumer spendability as well.
Yeah, but on the other side, Dave, I mean, that's one side. The other side is PVH, which is the old Van Heusen, is what that company's called now. They got upgraded by Jeffries, and so they're talking about recovery and Tommy Hilfiger and Calvin Klein, and so they're actually trading up a little over 4.5% this morning.
Yeah, since I moved to Florida, I haven't been wearing dress shirts very often, but that's an old name I used to live in. Resetting the table for the morning, up day on virtually everybody but the Dow yesterday, and we're blaming that all on United Healthcare. 45 minutes before we open this morning, do we have some good news to talk about?
Well, right now, I mean, it's not great, but we're in the green. The Dow is up about 0.1%. The S&P 500 is up almost 0.2, and the NASDAQ 100 is a little over 0.2. On the other side, we've got a lot of red ink. Silver's down another 2%. Gold's down 1.75% this morning, and then crude oil's down almost 1%. Still about where it was, maybe a little lower where it was yesterday morning. $63.07 a barrel.
It's a more manageable area, and it might be good for the oil shale industry if we can stay in the low 60s for a while. They got scared at $58 and $59 barrels. Evidently, the price of extraction's gone up over the last few years.
I'm sure.
I think so. Overseas markets, the Asian Rim generally up, especially the Chinese mainland markets. They were up the better part of a full percent at the close. Over in Europe, they're seeing a little bit of green ink, but not very much. I got two major European indexes. One's down by 0.04 of a percent. The other one's up by 0.01 of a percent. I think we can safely call that flat over in the European community halfway through their trading day. Getting my retirement in place where I can plan on retiring with an income I can count on takes a pro pair of eyes to get it together. How do I find you to use your resources?
Dave, that's why I created the Core Retirement Design, to help people design that retirement they always dreamed of. And one of those key aspects is creating income. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And we update you here every morning up to the minute as to what's affecting your money in real time on Light FM. Talk to you soon, my friend. You have a good day.
All right, buddy. You too.
Appreciate it. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you soon. Bye.